Financial ratio. What this analysis cover? 1 is profitability ratio, 2 is leverage ratio, 3 is liquidity ratio, and last is activity ratio. Profitability ratio. Profitability ratio can be redefined as a class of financial ratio that is used to assess a business' ability to generate earning relative to each revenue, operating cost, balance sheet asset, and shareholder equity over time using data from a specific point in time. Leverage ratio. A leverage ratio is one of the several financial measurements that look at how much capital comes in the form of the debt, which in loan or assess the ability of a company to meet its financial obligations. Liquidity ratio. This liquidity ratio aims to determine the ability of a business and a company to meet its financial obligation during the short term, and it was also to maintain the short-term debt paying ability. There's many ways to calculate the liquidity ratio. Activity ratio. The activity ratio measures the company's sales per another asset account, which is the most common asset account used are account receivable, inventory, and total asset. This kind of ratio measures the efficiency of the company is using the resource.
Next is the introduction about KPJ Healthcare. Established in 1981 as the first private specialist hospital in Johor, KPJ Healthcare has been at the forefront of the Malaysian healthcare industry. Over the years, it has built an integrated network of more than 29 specialist hospitals across Malaysia and expanded internationally to Indonesia, Thailand, and Bangladesh. KPJ's mission is to deliver quality healthcare services guided by its core value of commitment, accountability, respect, and excellence. These values drive its vision to provide exceptional health treatment and care, supported by experienced doctors, innovative technology, and well-trained staff. KPJ's competitive advantage lies in its ability to offer accessible, high-quality healthcare services and its strong presence in the private healthcare market. With its tagline, Care for Life, KPJ remains focused on being the preferred healthcare provider in the region.
IHH Healthcare has over 50 years of history, with roots in Malaysia dating back to the 1970s. It operates a comprehensive healthcare network, including multiple hospitals such as Clearnegus, Pantai, and Prince Court Medical Centre, totaling over 3,500 lessing beds. Achievements include accreditation by the Malaysian Society for Quality Health (MSQH) and the Joint Commission International. Next, we proceed with vision and mission. Strive to become the world's most trusted healthcare service network by delivering care aligned with the motto, Care for Good. Our core values: patient first, prioritizing patient needs; integrity, commitment to doing the right thing; empathy, listening with care; teamwork, promoting collaboration; excellence, driving continuous improvement and innovation.
Here are the 4 ratio trend analysis for year 2021 until 2023 for KPJ Healthcare Berhad. Our team member will elaborate more for these 4 ratio.
In this slide, I want to share about key financial ratio 2021 until 2023. So you guys can see our gross profit margin increased from 35.80% in 2021 to 41.19% in 2023, indicating improved operational efficiency. Okay, so operating profit margin rose significantly from 9 to 50% to 13.67%. Net profit margin grew from 2.50% in 2021 to 7.91%, showcasing better control over costs. So we next to return on asset increased from 1.06% to 4.17%, reflecting better utilization of assets. Return of equity improved from 2.92% from 11.95%, indicating higher returns for shareholders. The steady growth in profitability ratios over 3 years highlight of KPJ Healthcare's ability to enhance financial performance and operational success.
Now, let's look at KPJ Healthcare's liquidity ratios from 2021 to 2023. Liquidity ratios are important indicators of a company's ability to meet its short-term financial obligations. From the graph, we can see a positive trend in KPJ's financial performance. The current ratio improved significantly, increasing from 0.88 in 2021 to 1.24 in 2023. This shows that KPJ now has sufficient current assets to cover its short-term liabilities. The quick ratio, which excludes inventory from current assets, also rose from 0.65 in 2021 to 1.18 in 2023, reflecting better liquidity and financial health. As for net capital working, KPJ moved from a deficit of 531,665 in 2021 to a positive value of 267,361 in 2023. This indicates that company is in a much stronger position to fund its day-to-day operations and meet immediate obligations. Overall, these improvements show KPJ's focus on financial stability and operational efficiency.
Let's continue leverage ratio year 2021 until 2023 for KPJ Healthcare. Debt to equity ratio for KPJ Healthcare decreased from 1.75 to 1.26 2022 and increased in 2023 1.87. Higher ratio is less desirable as it indicates greater use of debt and financial risk. For loan to value ratio is increased 2021 until 2022 from 0.16 to 0.27 and decreased 2023 0.26. Besides, interest coverage ratio for KPJ Healthcare increased from 2021 until 2023 with 1.56 times to 2.8 times 2022 and 2023 is 2.79.
Activity ratio for KPJ Healthcare year 2021 until 2023. Average collection ratio for KPJ Healthcare is 64.49. KPJ Healthcare started to increase in the year 2022 at 70.43 and not change in 2023 at the same amount like the 2022. In 2021, the account receivable turnover for KPJ Healthcare is higher at 5.49. In 2022, decreased to 4.52, but in 2023, increased back to 5.07. Inventory turnover KPJ Healthcare in 2021 is 31.38, higher than 22 and 2023. It shows KPJ Healthcare is a better managing inventory. Fixed asset turnover KPJ Healthcare in 2021 is 0.98, higher than 2022 and 2023 at 0.67 and 0.79. Fixed asset turnover look decreased from 0.98 to 0.67 and back to track increase to 0.79 in 2023. In 2023, asset turnover ratio for KPJ Healthcare is higher at 0.48. A higher asset turnover ratio shows that KPJ Healthcare has a better efficient in managing the resource. The asset turnover ratio for KPJ Healthcare consistent increase from 2021 until 2023. Next is comparative analysis of KPJ Healthcare Berhad and IHH Healthcare Berhad for year 2023. It also has a probability ratio, leverage ratio, activity ratio, and liquidity ratio.
The presentation focuses on comparing the profitability ratios of two healthcare companies, which is KPJ Healthcare and IHH Healthcare, for the years 2023. It used a bar graph to visually represent the key profitability. Gross profit margin. This measures the profitability of a company's core business operation. IHH Healthcare has a significantly higher GPM, 70.20% compared to KPJ Healthcare, 41.90%. Operating profit margin. This indicates the profitability of company's operation after deducting operating expenses. Again, IHH Healthcare has a higher OPM, 19.34% compared to KPJ Healthcare, 14.34%. Net profit margin. So this shows the overall profitability of a company after all expenses, including taxes and interest, are accounted for. IHH Healthcare NPM 19.20% is also higher than KPJ Healthcare, 7.91%. Return on equity. This measures how effectively a company uses in shareholders' equity to generate profits. Interestingly, KPJ Healthcare has a slightly higher, which 7.91% compared to IHH Healthcare, 6.76%. Return on asset. This indicates how efficiently a company uses its assets to generate profit. KPJ Healthcare has a higher ROE, which is 10.70% compared to IHH Healthcare, 10.48%. So overall, IHH Healthcare generally outperformed KPJ Healthcare in terms of profitability in 2023. IHH Healthcare higher gross operating net profit margin indicate better management of its core business operation and cost control. However, KPJ Healthcare higher ROE and suggests that it may be efficient in utilizing its equity and assets to generate profit.
We continue the leverage ratio for KPJ Healthcare and IHH for year 2023. Debt to equity ratio for KPJ Healthcare 1.87 is higher than IHH Healthcare 0.55 in 2023. For debt to asset ratio, KPJ Healthcare is higher 0.65 between IHH Healthcare 0.36. For loan to value ratio, KPJ Healthcare is higher 0.26 between IHH Healthcare 0.17. It shows KPJ Healthcare is better than IHH Healthcare in leverage ratio for year 2023.
Last but not least is activity ratio for KPJ Healthcare and IHH Healthcare for year 2023. Average collection ratio for KPJ Healthcare is 70.43. For IHH Healthcare is 53.77. In 2023, account receivable turnover for KPJ Healthcare 5.70. IHH Healthcare is higher with 6.79. Inventory turnover KPJ Healthcare in 2023 is 28.61 and IHH is 10.76. Fixed asset turnover KPJ Healthcare is 0.79, lower than IHH Healthcare is 1.56. In 2023, asset turnover ratio for KPG Healthcare is higher at 0.48, by IHH Healthcare is 0.42. ITO, ATO, and ACFP for IHH Healthcare show that lower result more than KPG Healthcare. It showed that KPG Healthcare more efficient inventory management, average length of time, and better in managing their resources. For control, investment in asset. For account receivable and fixed asset show that KPG Healthcare is lower than IHH Healthcare. It show IHH Healthcare show that have a low average collection period and efficient in generating sales from the available fixed asset.
Next, let's compare KPJ Healthcare's performance with IHH Healthcare in 2023. KPJ clearly demonstrates a stronger liquidity position. The current ratio for KPJ stands at 1.24 compared to IHH 0.90, indicating that KPJ is better equipped to cover its liabilities with its current assets. Similarly, the quick ratio for KPJ is 1.18 while IHH is 0.81, further highlighting KPJ's superior financial stability. When it comes to net working capital, KPJ recorded a positive figure of 267361, while IHH shows a deficit of 74907. This significant difference indicates that KPJ is not only managing its current assets more efficiently, but is also in a stronger position to fund its short-term operations compared to its competitor. In summary, KPJ's financial performance over the years, combined with its competitive edge, positions it as a leader in Malaysia's private healthcare industry, showcasing its ability to deliver.
So I want to recommendation for KPJ Healthcare. First, boost profitability. This likely involve strategies to increase revenue, such as expanding service, attracting more patients, or raising prices. It could also involve cost-cutting measures to improve efficiency. Second, reduce debt. This could involve paying down existing debt, restricting debt to lower interest payments, or exploring alternative financing options. Third, improve asset utilization. This could involve optimizing the uses of existing assets, such as equipment and facilities, or investing in new assets to generate higher return. Last, improve liquidity. This could involve managing cash flow more effectively, such as improving collection processes and reducing delays in payments from customers.
Next is for strengthen liquidity. First, improve current and quick ratios by maintaining a better balance of short-term assets and liabilities. Second, maintain higher levels of short-term cash or marketable securities to improve liquidity ratios. And besides that, reduce reliance on short-term debt. First, use cash follows to pay down high-interest loans. Second, build stronger cash flow forecasting system to manage short-term liabilities efficiently. And lastly, sustain profitability leadership. First, focus on high-margin services and leverage digital health technologies. Next is continue leveraging operational efficiencies and cost management strategies to maintain profitability while exploring new revenue streams.
Conclusion: financial ratio analysis is a powerful tool for understanding and evaluating a business financial performance. You can get performance evaluation, branch making, decision making, financial health assessment, trend analysis. A higher return of equity indicate that the company is generating good return for its shareholder. Benchmarking its current ratio is lower than the industry average. It may have liquidity issue. Decision making help identify areas that require cost control of efficient improvement and assist in determining whether a company is a good investment based on its financial stability and profitability. Financial health assessment give a ratio highlight critical financial aspect like liquidity, leverage ratio, and profitability. A low debt to equity ratio suggests the company is not overly reliant on borrowing. Trend analysis, tracking financial ratio over time. Stakeholder can identify trends that indicate growth, stability, or potential about the company.
Simplify complex financial data is simplified for stakeholders like investor, creditor, and manager to grasp the company financial position without living into detailed account. Next is risk identification. Its ratio can flag potential risk early, such as liquidity problem, asset debt, or declining profitability. Next, resource allocation is if the asset turnover ratio is low, management might focus on better utilizing asset to increase revenue. Next, stakeholder communication is build trust and transparency by providing clear insight into the company operation. Next, support strategic planning. If the net profit margin is low, management might strategize to reduce cost of increased pricing. That's all.